the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares rose today as investors continue to monitor trade and geopolitical uncertainties around the world, the Straits Times Index was up 0.35% at 3,908 points at 2 p.m. with a value turnover of some 685 million Sing dollars in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI closed in the green, up 0.34% at 3,908 points. In terms of value turnover, we are looking at 1.25 billion Sing dollars. Now gainers outnumbered losers 250 versus 233. Top advances for today we've got for you Jardine Cycle and Carriage, GMXUSD and SGX. And top decliners we've got for you PC Partner, Venture Core and iFast. Now in terms of counters to watch, we have ST Engineering. After its Group CEO Vincent Chong at the firm's company investor day held yesterday said that the group is targeting 17 billion Sing dollars in revenue and improved net profit margin that outpaces its top line increases by up to 5 percentage points annually over the next 5 years. Now elsewhere from Indonesia's GoTo Gojek's response to rumours of a Grab buyout to Singapore Airlines set to get a first quarter boost from Lady Gaga's Asia exclusive concerts. We've got more international and corporate headlines in focus. Also on deck, economists' forecast for Singapore's growth, the Bank of Japan's rate decision, as well as more on OpenAI's first Stargate site. Now, a packed day, as you can imagine, and joining me on the line is Jun Chong, Assistant Dealing Manager from Mumu Singapore. Jun Chong, welcome.
Hello, Tian Tian. Thanks for having me.
Great to have you on board. And Jun Chong, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when it comes down to the counters to watch? Say ST Engineering, given the new revenue and profitability targets, or Centurion after hitting that 52-week high?
So for the Straits Times Index, it remains in the green today with a 3 days straight so far, closing off at 0.34% at 39.08. So for ST Engineering actually is the top gainer for today's trading session. So with plans by the company to raise dividends in 2025 and for 2026, if the revenue and profits they continue to rise. I think some of the key announcements investors will be really interested is the interim dividends of 4 cents per share for the 3 quarters of 2025 and a final dividend of 6 cents per share. And then coming for financial year 2026, the new dividend policy looks to pay out about 1/3 of its year-on-year increases in net profits as increment dividends. So with this growing share price and as well as the DPU increase, dividend investors would certainly be keeping an eye on ST Engineering, especially as we're seeing like T-bills, the rates is going lower than the dividend yield that we see for ST Engineering. For Centurion, it's actually approaching the $1 billion market cap as it reaches its new high. So for a company like this, we call them the mid-cap stocks. And the mid-cap stocks in Singapore, they have been experiencing a lot of institutional inflows as well as a lot of increased trading activity, especially in 2025 Q1. So with rising interest in mid-cap stocks in Singapore right now, and from a momentum point of view, Centurion could actually be benefiting from this rising interest for mid-cap stocks.
And let's go on to Singapore Airlines, Jun Chong, because Bloomberg intelligence analysts, they say Singapore Airlines stands to get a first quarter boost from Lady Gaga's Asia exclusive concerts set to take place in May. That's SIA's first quarter. And that especially so given how Singapore is the only Asian stop in the singers or the Grammy Award-winning stars Mayhem Tour. How far do you agree with this, though?
I think many will take a lot of comparison from Taylor Swift concert last year.
Are you going to the concert?
I'm not going to the concert, unfortunately. Yeah. But I think a lot of people will be taking a lot of comparison between both of them.
Yeah.
But the key difference now, I think, is really that Taylor Swift has done it in Singapore and Japan, whereas Lady Gaga is doing it in Singapore only. And based on what we have seen right now, I guess everyone will agree that a lot of companies stand to gain from this. While I did not personally queue for the tickets, I did see that the pre-sales number exceeded 2 million. So I also did a recent interview with Zhao Bao on this before the pre-sales, and now with this over 2 million people that are queuing for it, it is likely that many sectors, including Singapore Airlines, they look poised to benefit from this Lady Gaga concert. So similarly to the one last year, there are a lot of intangible benefits to our local economy. So apart from SIA, downstream sectors like SETS, or even ride-hailing services like Grab, or a lot of our hospitality sectors, our hospitality REITs, will stand to benefit a lot from these concerts. I do believe that companies will post a better profits due to the concert. However, investors should not be hoping for a massive rally per se in the stock market just from the concert, as we have seen from last year during the Taylor Swift event as well.
And I suppose hotel prices as well. Last year we were saying Swiftonomics. Let's see if we'll get Gaganomics this year. But staying in Singapore, let's talk about economic growth, Jun Chong, because private sector economists maintained a median forecast of 2.6% for Singapore's 2025 growth. They also lowered their expectations for inflation. How far is this in line with your expectations, and what are you expecting when it comes down to the dollar's near movements in April and beyond?
So I guess many of our political leaders have expressed concerns on the Singapore economy being largely dependent on external reasons, and these reasons have continued to trouble the world. So of course, firstly, we have U.S. President Mr. Donald Trump and a lot of his trade tariff policies, which has now taken place. Then we have new escalations in Gaza. And right now, we also have the Ukraine-Russian war where there's no ceasefire after the recent call by both leaders from the US and Russia. So with such troubling geopolitical scene, the medium forecast growth is actually rather in line with expectation. And it's, I would say it's rather easier or better to revise it lower at the start than to lower it down later. So inflationary pressures definitely have eased from the highs we have seen over the past years. However, many central banks have remained cautious due to the inflationary policies that is set up by US. So in January, we did see that MAS did reduce the slope of the Sing dollar near slightly. However, it's unlikely we'll see any major movements during the April session. The Sing dollar has remained stable to most major currencies, and right now there's not much of a push factor for any major changes, maybe until the next meeting in July itself.
And Jun Chong, across the region, Indonesia's GoTo Gojek reiterated today that there was no agreement with any party about a potential transaction. This, of course, after a media report emerged that Singapore headquartered Grab was moving forward to buy it. Any thoughts on the matter? And perhaps the second part of the question is, does it make sense for Grab to purchase GoTo given the anti-competition concerns?
So I think Grab has been in talks to acquire Gojek for years now. And we do see that Gojek has subsequently, they have merged with Tokopedia to become what we know now as GoTo.
Yeah.
Yes. So Grab has largely dominated the Southeast Asia ride-hailing scene as well as some of the food delivery scene. And the acquisition for Gojek will allow it to really capture the market in Indonesia. So according to different reports, we are seeing about for 52 to 48% kind of market share in the country itself. So the thing for Grab itself to acquire into Indonesia is also the largest country by population in Southeast Asia. So from a business angle, it's understandable on why Grab will be focused on this acquisition, despite a lot of this anti-competition concerns and to some extent national concerns. So personal thoughts on this would be that this could potentially become the first, if the merger do go through, become potentially the first real super app in Southeast Asia. That's something that many companies and many consumers have been vying for. Because many have argued that the super apps in Southeast Asia now is not on par with those that we have seen in China, namely Tencent's WeChat. So should such a merger go through, I personally think that this could be the start of the first all-rounded super app in Southeast Asia. However, this would really largely be dependent on the consumer watchdogs and all the anti-competition concerns from both sides.
We're now in conversation with Tu Jun Chong, Assistant Dealing Manager from Mumu Singapore. Well, Jun Chong, let's stay in Asia. If we look at the Japanese yen, it edged up against the US dollar after the Bank of Japan kept interest rates on hold, warning about the outlook. How far did that weigh on regional investors or regional markets today? Or is this overshadowed by the broader concerns about world trade? I mean, markets were mixed today. Gold hit a record high. What are your thoughts?
So I would say regional markets remain somewhat lukewarm towards the Bank of Japan's decision, as the Bank of Japan's interest rate decision has been more or less largely priced in by market participants, because a lot of them have been saying that the interest rate hike will likely only happen on June this year. So in the region, I think the hot markets this week are the Indonesia IDX, which has climbed up slightly from the market rout yesterday that halted the exchange for a bit. And even for Thailand, SET, it has also climbed out of its recent low after hitting the recent low from the post-pandemic session itself. So overall, I say on the yen side of things, carry traders borrowing yen to do trades on the US dollar would also rejoice, as the Bank of Japan is likely to maintain the interest rate for possibly another 3 months, while the US rate has stayed stable. So overall, I would say that the Bank of Japan's decision has been largely overshadowed by geopolitical concerns. Spot gold, on the other hand, has continued to hit new highs, as of course the geopolitical scenes escalate. US dollar has also weakened against some currencies, and this weakening has become cheaper for a lot of foreign countries to buy gold as well. So for gold side of things, I think these are one of the many small factors that have led gold to the new high these days.
And further away, Jun Chong, let's talk about Stargate. Because the first data center complex for OpenAI's $100 billion Stargate infrastructure venture, it will have space for as many as 400,000 of NVIDIA's powerful AI chips. Now, that is an amount that, if filled, it would make it one of the largest known clusters of AI computing power. How would you read into the latest piece of information? I mean, how far also can Project Stargate lift investors' confidence in the U.S. tech sector? If we look at Meta, it just became the last of Magnificent Seven stocks to lose its year-to-date gains.
All right. So when I saw this, the first thing that came into mind when I saw it was just to congratulate NVIDIA, because 400,000 chips is a huge amount to buy, per se, and this would really, certainly, if not, make it one of the largest known classes of AI computing power. So, of course, the project could ultimately be using any other chips should they choose to as well. Revenue for chips company, however, will likely see a boost due to the massive buying by this project itself. However, this project itself, I do not think that it will lift investor sentiment on the AI rally we have seen so far. So the Magnificent Seven leaders have a huge capital expenditure on this AI infrastructure over the past year. And investors are still eagerly waiting for this capex to materialize into revenue for the shareholders themselves. For 2025 itself, the tech mega caps have announced that they were going to spend more than $300 billion on US dollars on AI infrastructure. And investors have started to become more and more impatient due to the real lack of revenue they are seeing from huge capex. So to lift the investor sentiment again, I think investors would likely need to see more detailed announcements from the tech leaders to see how this huge expenditure will really result into profits for companies as well as shareholders, and also possibly a detailed timeline on when they think that this capex can actually be break-even for these mega tech companies.
And I've got about 1.5 minutes to go, so we can take some time with this one, Jun Chong. The Federal Reserve, it is set to announce its latest rate decision overnight. The Bank of England will follow suit tomorrow evening. What are you keeping your eyes on this time around? Because both central banks, they are expected to stand pat on rates. Right.
So it's highly likely that both the U.S. Federal Reserve and the Bank of England will likely keep their interest rate intact for both of their meetings respectively. This is kind of similar to the Bank of Japan that has actually kept their interest rate unchanged.
Steady, yeah.
Yes. So a lot of central banks have actually cited geopolitical uncertainty being one of the reasons for maintaining their interest rates decision. For the U.S. itself, of course, for U.S. Fed Chairman Mr. Jerome Powell, one of the considerations he did have was due to the inflationary policies set up by U.S. President Mr. Donald Trump. So for the Federal Reserve meeting that we will have, it is highly likely that the Fed Chairman Mr. Jerome Powell will keep interest rate intact. And the press conference following the announcements will be the key thing that a lot of investors will be watching for. Because as it stands right now, the U.S. inflation rate has not reached the Federal Reserve target of 2%. It's quite close, but it has not reached the target of 2%. And the thing for Mr. Jerome Powell right now is there are stagflation worries, as well as for last week we did see there is a possible recessionary fears right into his playbook right now. So due to the stagflation as well as the possible recessionary fears, Mr. Powell will likely have to address this issue during the press conference following the announcement to ease a lot of investors' confidence on the economy. It's unlikely that he will do the rate cut as well.
Yeah, so I suppose lots to watch indeed. Thanks so much for the insights, Jun Cheong. That was Jun Cheong, Assistant Dealing Manager from Mumu Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.